capital markets. It's Monday. And then you know how investors like to approach the market on Monday. Everybody focused on the charts, trying to find out exactly what is happening in the market, just to give them an informed decision as to how to approach the market. That's why we're here on Market Watch, brought to you by Nairametrics Television. We're taking a look at what is happening with UBA and Zenith Bank. H1 results, the numbers are out. And then we're also going to be taking a look at what is happening with Sterling, UBA and Zenith Bank, I beg your pardon. And then we're going to be taking a look at what is happening with Sterling. Sterling is out to raise 87 billion naira. Are they trying to meet up with their recapitalization? We're going to find out about that. Seplat Capital Markets Day, the oil giants have revealed its 5-year growth plan. Some people have 1 year, some have 2, but they have 5 years. Imagine. That's a bold step. Is that really going to affect the numbers, investors? Is it going to shake investor sentiment? You're going to find out. And then the U.S. rate cut, Treasury bills, all of this, we're going to have the conversation. I have 2 gentlemen. One is a city gentleman. You see his articles on Nairametrics. And then another is an amazing man, Muktar Mohammed, and then Idika. Both of them joining us on Market Watch, brought to you by Nairametrics Television. My name is Frank. My dad's name is Fagbo. Okay, so let us H1 results. Zenith Bank, UBA. How do you see the result? What's your take about it? Let me start with Muktar.
Well, first and foremost, I think for me the result is positive in the sense that we weren't expecting dividends. It will go by forbearance, and so that will be a lot of organizations have come. Not Nairametrics, but I've seen a lot of write-up that said that it will be very difficult for the banks to pay dividend. They will only be able to pay dividends, some says even to 2027, some even said could get to 2028.
Interesting.
So for Zenith to pay the kind of dividend increment in 25%, I mean, that was a clear message to investors. Now, when you look at that result, yes, it has its upside, a lot of upside.
What are the upsides?
You look, number one, as an investor, the upside is a dividend payment.
Yeah.
And then secondly, you also have to look at the profit, especially their core area. Interest income was huge. That's their core business. I mean, they did a lot of lending.
Yeah, true.
And that also increased their bottom line. You also have to look at also their type of business in terms of account customers base. We see a lot of retail business there now.
Yeah, lots.
Before now, we have known them to be the giant in corporate banking, but you can see now they are going to retail. They have a lot of customers, and so that also helped them. And also, you also look at the other one we have to look at again is their assets base in terms of their shareholders fund that has also improved to about 4-point-something trillion, which is huge compared to even the money they've even raised. So when you look at that, also you also have to look at also the provision that was made, about almost 700 billion. So if you add that provision to what it says profit after tax, you've seen that they would have been making about over $1 trillion in 6 months.
Yeah. So
that is huge. And sometimes you wonder how innovative, how they'll be able to make that kind of money. Also, I think if you look at that result, by and large, it's very, very impressive, especially going forward. But people will look at that large provision and think it's the negative in it. But again, I mean, their books are clear. So going forward in the next 6 months, we are seeing a clear book that 1 trillion can come in again.
Very true.
And again, one thing people, if you look at Zenith Bank antecedent, you realize that their last half year is always better than their first half year. If you look at their track record, going through their track record. So if you are seeing what you're seeing now, going to the last half year, you are expecting a lot of positivity because they normally finish very, very strong. Again, like I've talked about the earning, even if it was down by almost 29%, they also increase the dividend payout by 25%. That tells you the kind of liquidity that is with Zenith Bank. to meet capital adequacy ratio and everything is fantastic. Then again, you look at, like I said, the earning per share is still robust. That means that they can be able to pay what they paid last year and even above it by 25% again. So a lot of positivity in that. I think if you don't look at that result clear, look at that result very well, you think that result is very bad. Because again, for investors, they now looked at the dividend payout of 25 kobo compared to 2 naira that was gotten last year. I think that's where we are concentrating. We are looking at that drop. We are not looking at the provision. We are not looking at the forward earnings about 17 naira 72 kobo, which tells you that at the end of the year, that same bank can decide to pay 5 naira and still at the end of the year pay 5 naira 25 kobo.
After paying 25 kobo. You think you can still pay 5 naira?
No, I'm telling you that if you look at the earnings, forward earnings of 17 naira 72 kobo.
Yeah, true.
That's their retail earnings.
Very true.
So they still that, but I'm not saying they will pay, I'm just saying, but again, you can't ever, GTCO surprised us last year where they decided to pay 7 naira.
Yeah, true. Yeah, true they did.
So it shouldn't shock if such things happen. But again, I'm not expecting that. But I'm saying that again, one thing people didn't look at, they don't look at the share dilution because the initial right have been also been included in that. Also. That also is people are not looking at it. But you look at again provision that was made, the forbearance is gone. Remember, they are still in the market, also trying to raise funds.
They're still in the market trying to raise for recapitalization?
Recapitalization. Which I think ended on last week, Friday, when that result came in, unless there's an extension.
Yeah.
And so when you look at that with the result they have, I don't think it's a very, very bad result. But again, in terms of dividend payment, that's where investors are more interested in. And you saw that reaction in the market.
Nigerians will say at all, 9 bad pass.
But again, like I said, we're not expecting any bank to be able to pay dividends. So even pay 25 kobo.
It's something.
Idika,
do you share the same sentiment? Let me hear your opinion about the result. But remember that also their share price we had decline. What do you have to say about that?
Oh, well, first of all, I agree with Mohammed. Yes, as an investor, you looked at their core income, which is solid. It's very, very impressive. Both UBA and Zenith Bank. Again, the Zenith Bank achieved net interest income of about 1.3 trillion. So, let me start from there. I think what really affected them, like really mentioned, is them look at the impairments. Not only the impairments. I think the major problem there is the net trading foreign exchange transactions that affected them. Not that really affected them. It's affected two of them. Yeah. Even if you look at UBS impairments, actually the impairment dropped to 35 billion from 57 billion. Yeah. Now, if you go to the net trading gains, that's where it's not as if that, like you really mentioned, it's not as if that it is bad. It's just like the paper money they earned last year is no more available. Do you get the point? That's just the simple, the summary. That's just the thing. It's not as if that the bank didn't do well. For me and for core investors, what you should look at is the core income. Yeah. And to add to it, at least despite the impairments, the provisions, and the net trading income that dropped in H1, at least they were able to declare dividends, which is key. First Bank, Zenith Bank, at least 25% increment to 1.25. The other one dropped to 25 kobo. But still, it's very, very impressive. And another key thing for them, especially for Zenith Bank, is deposit base. Deposit base is about 23 trillion compared to its asset base of about 30 trillion. So you can see the thing. That means they have cheap funds they can really latch on. And if you equally look again, if you look at the composition of the interest income, which is the bulk of their income,
Very true.
You see that it is driven by one interest income from loan and advances, which is about 37% of gross earning. Now go down again. If you look at the other component, that is interest income from treasury bills, which is now almost matching the interest income from loan and advances, which is about 31% of gross earning. So you can see the diversification.
If we compare it to the fact that there are predictions that we're going to experience rate cuts, and if we're going to experience rate cuts, interest income is most likely going to drop for some of these banks. And you're saying that you also said that by the H2 we should see much more improvements. So don't you think that will affect their bottom line?
No. If you look at don't look at it from that angle alone. Okay. When you talk of interest rate cut, of course, if you cut interest rates, fine. That will now not only though that will from that angle of maybe the pricing of the loan will drop sort of. Yeah. But if you look at it from this angle, that more people will now access loan, because if you cut interest rates, borrowers will tend to get more. Yeah, true. And the probability of them defaulting will reduce. So the provision will drop.
Yes, and again, if you look at that Zenith Bank result, you see that their lending also went down.
Yes.
True. So and that was because they are looking
at dropped to 9.6.
So they are looking at the risk level. That means they are not really lending because of the microeconomic condition. So once the microeconomic condition improve, like he said, then there will be a more loan expansion drive for a lot of and again, when you look at it again, that's why we say their core business advancement, income interest is huge. Then one thing we don't look at again, account maintenance fee. The profit there also is huge.
That is fees and commission. Fees and commission.
Doesn't like that, but
they made a lot of money too.
It's a global best practice, and that has helped them because again, you see that you can correlate that again with their customer base, retail customer base. Yeah, we see that has increased. Yeah, and so that also helped that account maintenance fee, income. So this bank I think they were looking at the microeconomy level and to reduce their exposure. But definitely now we'll see if there's a rate cut. But as I'm sitting here now, I can't really think there will be an immediate rate cut, because again, when you look at the inflation, when you look at it's still fragile.
It's just 2 days away from now.
It's still fragile, but
we're going to find out.
We're going to find out. But again, if that happens, like I said, the bank are very, very innovative. And the UBA, if you look at their earning per share, it's slightly just different from what we had last year. Yeah, true. With despite reason, we're earning per share last year I think it was about 9 naira, but now we're having about 8 naira and something. So slightly different. So there's still a lot of like he said, when you just look at that dividend payout. But I think on that day, immediately that result came, we saw that stock goes to 42 naira. But I think when later on investors digested the result, we saw that stock moves to close at 44 naira.
Yeah, true.
Well, to me, I always say this. To me, this short-term fluctuation, I don't really take it as a problem. You understand?
You have a long-term view.
You always have a long-term view of what
because you are not a trader. You're a trader. It's very important.
Yeah, he's a diamond.
You are an investor.
I'm an investor.
You are a fundamentalist.
Diamond paper man.
For people that are technical analysts. The green and the black ball.
True. Let's move on to Sterling. Sterling is in the market, 87 billion. First, do you think that these guys would be able to, do you think they'll make it before the deadline? One. What's your take about that? Let me hear from you, Idika.
Yes, like you said, they are there to, I think it's new issue about 12.8 billion new shares, and they are at 7 naira. That means they're planning to run about 87 billion. I think as at close of I think half year, if you look at their statement, their share capital and share premium accounts stood around 150 something thereabout. So that means they need about 143 billion to make it up to that 200 billion threshold. And then going to the market to raise 80 87 billion
Yeah.
is okay. Yeah, they are likely. I see them. They are likely to make it. Though other banks are in the market trying to raise this, but when you look at the dynamics of their offer, it's likely it's possible to argue that yes, they are likely to make it because one, they offer at a discount, 7 naira against current market price of 7 naira 40 kobo. So it's at a discount. And apart from that, if you look at their fundamentals, which are very, very okay, equally look at their valuation, though there is a little bit valued at a premium against the industry, but maybe because of their growth. So the market is saying, they will be able to sustain. That's why they are giving it that premium valuation. But overall, I think, yes, they will be able to raise it. It's just 43 billion.
Your advice to prospective investors, what do you think?
Like Idika said, I don't think any bank will have problem raising this capital base.
It's 7 billion.
I don't think, I'm not even talking about sterling.
Okay.
I'm talking generality of the bank, the worst that will happen, we will see merger. But again, who is going to merge? Is it Sterling Bank that will merge? Is it FCMB that will merge? Is it Fidelity that will merge? Look, I don't, for me and where I'm seated, I don't think those banks will lack raising those capital base. Because you see, there's no any panic from any of the bank. And like you said, the premium of 40 kobo already. And again, if you compare it to others, I think of all the right issue, I think it's the issue that we have seen thus far. I think there seems to be also the ones at the day their right is coming at a premium. Most of them at the time it was listed, their right came in, they were selling high, but more higher than what we have, even if at the end of the day they're now almost close at par. But immediately after that, my advice for investors, when you look at that bank at 7 naira, like we said, we do what Idika will always do, comparative analysis. And again, yes, the fundamentals is there. Like it's a well-managed bank. We must give it to them. They are a well-managed bank.
Seplat Capital Market Day. 5 years, 5-year growth plan. What is the plan all about?
Yeah, I think one, if you look at the plan, one, it has to do with their production.
Yeah.
Expanding their production base. I think they are looking at, they want to, by 2030, they will have to have about 200,000 BOED. That is a barrel oil equivalent per day. So from the current position in H1. You understand? So they want to expand it. Then another thing is that they really want to, one, expand they are looking at, they are projecting their cash flow, both their cash flow in 5 years. They are looking at, I think, about 5 to 6 billion US dollars. And if you look at their past trends over the past 5 years, I think they have been able to mobilize cash flow from operation of about 1.99 billion. You can see the projection. You can see the projection. They are projecting between 5 to 6 billion in cash flow. And already, if you look at the trends, they have about 1.9 over the past 5 years. Now look at the cash flow. The free cash flow. From there, over the past 5 years, I think they were able to generate the free cash flow is about 1 billion US dollars. And they are projecting about 2.5 to 3 billion. So you see, it's an extensive and impressive expansion focus, and fine, it's okay, and it will help them. And importantly, the Muktar really talk to say, dividend, which is very, very important for investors.
What's their share price now? I think it's almost 5,000.
No, I think 5,000. Is it up to 5,300 and thereabout? 5,300. I think 373 naira, 30 kobo.
30 kobo.
Yeah. Now you see the another angle. Now I like Seplat because it's a dividend paying company. Not only dividend paying company, they pay quarterly.
Yeah,
they pay quarterly. So that means if you're an investor, you at least you are sure first quarter they will pay, second quarter, third quarter, and fourth quarter, and they are still maintaining it. And they are saying that out of this cash flow projection of about let's say cap of 3 billion, we are planning to give out 40 to 50% of it.
Yeah.
Do you get the point? And they are starting In Q3, at least they are increasing that to 5 cents.
5 cents.
In Q1, they paid 4.6. In Q2, they paid 4.6 cents. That's as interim dividend. And they are saying Q2, we are increasing it to 5. And that will continue to increase so that we can achieve that projection of 40 to 50% of our projected 5-year operating cash flow. So that is impressive, and that is okay.
What do you think will be the reaction of investors with the 5-year growth plan?
Well, ordinarily it should be positive because what we see in Nigeria, most of in those companies that at least they always get this 1-year plan.
Yeah, true.
But this is the first time having a 5-year plan. So definitely this stock will mostly attract more investors that looked at the fundamentals.
But you know that we are in a very fast changing. So 5 years, there might be a black swan event. You never can tell.
Especially
in 2015, nobody knew we were going to have COVID.
In the oil and gas sector.
But that is projection.
That's why it's called projection.
That's what is projection.
Projection.
Normally, when you come back, you match the projection against the actual.
Yeah.
You shouldn't also forget that they just acquire the movie.
Yes.
So that is a huge, and they've not started. Investors have not started seeing value for that. That was a global asset in the first place, and so investors will begin to see value for that acquisition. And again, dividend payment, like he said, has improved. Liquidity also has improved. Oil price has gone up gradually.
Sure.
And if you look at their oil price projection, they are very conservative. They put it at $50 per barrel.
That's very, very conservative.
Very conservative.
It's even lower than our corporation bill.
What even the government is
doing. That's what I'm saying.
So you can see that they are forward thinking.
I think the in thing there is just the expansion, the projected expansion in production, which currently they are, I think, about 130.
Okay.
130,000. So they are now projecting to have about 200,000, which is
and again,
impressive.
not also when you look at that projection, like he has said also, that also you are not looking at the natural gas aspect of it again, which is very huge going forward.
Treasury bills. Result was released last week. It was oversubscribed, but I think it's even it's common, it's usual. What do you think?
It's not usual. It's not. There's something that is driving it now.
Okay, what is driving it?
Like, last week we said it.
Yeah.
That in expectation of rate cuts, people would like to lock in.
Before the result.
You understand? Before the result came out, we said it.
Yeah.
Now they have the stop rate for 91 days. I think about 15. The other one 15 point something. Then the 364 is about 16 thereabout.
Yeah, true.
Now the 91 day, I think, and the 364 day, they were oversubscribed, except the 180 days. You understand? So now the issue is that when you look at oversubscription, it's just telling you that people are afraid because of the US rate cuts, because of expectation that cuts that people would like to lock in. Again, it equally shows some level of liquidity in the banking system. So these could be the reasons why you have that oversubscription.
Yeah, and you should also forget that the governor of the central bank, Yemi Cardoso, made mention of it. I think during one of his interaction session when the president visited Brazil, that we'll soon get to that rate cut. So that also could drive sentiment because we see inflation has come down. We see a lot of businesses have struggled with that. We see consumer index perception also have gone up. Mm-hmm. So rate cut coming in also, like he said, they will definitely key into it. And again, not only that rate cut is going down here, it's going down globally.
Yeah. Now, this is even moving us to the US rate cut now, 25 basis points. Do you think it would affect our equities market? Do you think it will affect the fixed income? What's your opinion about that?
Positive for the equity market, positive for the fixed income.
Both?
Because we'll get a lot of funds coming in from that space now. Because again, you are seeing their rate cut coming in. That means what you get in America will be low. And these institutional investors, they look for where to increase their return. You are looking at inflation is almost less than 1. And then you're looking at good rate cuts coming into emerging markets, especially now that we've been able to maintain FX stability. Yeah. So if you look at the report that came in from from the Nigerian exchange group, we've seen an increment in terms of foreign investors in our market, and especially in the fixed income space and the equity space. And if you look at that result, what people are not looking at it again, is meaning that our market is very liquid. You see the inflow and the outflow, the two-way exchange system. That's what excites investors.
Sure.
And despite that, you've seen that the market has remained stable. So for me, I think a US rate cut could drive liquidity into our market. And that could also be responsible for what the Nigerian Exchange Group is trying to do, like we talked last week, extending that trading time.
So what sector do you think is going to hold that money? What sector do you think is ready, positioned?
That is a no-brainer. You know the sector, the banking sector, of course. The banking sector are always they're always a darling of foreign investors because of the liquid nature of it, entry and exit. So definitely, so that's why I said,
and even the companies that have that foreign earnings, like Seplat, like Seplat just mentioned, that has their foreign earnings depending on foreign currency component. You understand? Definitely it will affect them. Like apart from that, to add to what he said, if you look at the inflow in foreign transaction in the equity markets. Last year, I think the whole of last year, foreign portfolio transactions stood at about 899, which is about maybe about 13% of the total transaction. Now, between January and July, the thing has grown to about 6 trillion.
Yeah.
You understand? So, and with the rate cut, we are likely to see more inflow.
Like I said, I'm more excited about the well, I'm very excited that we have retail investors.
Yeah.
We have Nigerian investors holding that space. But when you want to see the kind of long bullish runs that you normally will see, it's only when you have those foreign investors come in.
Very true.
Because they tend to stay in an equity.
Absolutely, you are correct.
But some will say some of their money is hot money. So
hot money is everywhere.
It's everywhere.
It's a global spread.
Yeah, it's
so
global.
if you are saying you're a global market, you are one of the best market in the world, you must attract hot money.
Okay.
Of course. And the onus is now on the regulators to ensure that, they do those things that are required for them to keep the money, to protect the money.
But the main challenge is that hot money is coming and you have the tax law also coming. So
and I equally have the exchange rate.
The exchange rate. So we have a lot of things working for us.
A lot of things to talk about. And you've heard about the fact that, hey, the financial industry, the financial sector is going to be the one positioned for capital flight or capital flow that we're expecting based on the predictions from the US market, from the US rate cut. And then there are also some predictions that is most likely we're going to have a rate cut during the next MPC meeting, which is on the 22nd, it's starting tomorrow.
Today?
And then the next one is starting
Today is 22nd now.
Oh, 22nd.
Today and tomorrow.
My goodness. Today and tomorrow. So on Wednesday, you're going to find out how this is affecting the market and what exactly is going to happen. Investors going to price it into the market. So you're going to find out on Market Watch. This is Market Watch, brought to you by Nairametrics Television. I'll see you on the next one. Make sure you like, share, subscribe, and keep investing because, hey, you need the money.